Hi, and welcome to a brand new episode of ET World View, where we discuss all about world markets, trends, and much more. I'm your host, Neha Vashisht Mahajan, and today I have Mr. Abhishek Banerjee with me. He is the CEO and founder of Lotus Do Wealth, which is a SEBI registered RIA that gives stock basket recommendations, combining macroeconomic analysis with micro cap stock selection. Thank you so much, Mr. Abhishek, for joining us today on ET Markets live stream.
Pleasure and glad to be here.
So let's start worldview with US first. So inflation in the US is to 3%, but it is still above the 2% target. Do you think the Fed will cut rates to stimulate the economy now? And 10-year bond yields also dropped to 4.2%, yet Nasdaq didn't rally as expected on potential Fed cuts. So what is causing these mixed signals?
Yeah, so that's quite interesting. So yesterday, what happened was the US CPI, the inflation print came in, and it
Hmm.
cooled. It was 3%. It's still above the 2% target that the Fed has. So Fed here means Federal Reserve. One
Hmm.
distinction that Federal Reserve, how it's different from RBI in India, is Federal Reserve is like AMFI, or the mutual fund body. It's a self-regulatory body where every
Hmm.
bank has sent a representative to serve as a state governor in sorts, and then you have a combined Federal Reserve. So it is a self-regulating agency. They have two mandates. First is they want full employment. Second
Okay.
is they want stable prices. So these are the two mandates. RBI is a statutory body. It's a judiciary body. It can pass orders on its
Hmm.
intermediaries, and it is outside the control of executive, which means RBI is an independent entity which does not have to yield to
Okay.
the government if they have a
Hmm.
particular agenda. So given these differences, what we see in US is that in US the target inflation is 2%. They're at 3%, which is 50% above target. In
Yeah.
India, our target is 4%. We are around, probably experiencing an inflation of close to 6%. Urban inflation is higher, rural inflation is lower.
Hmm.
Headline inflation is lower. Inflation on education, healthcare, these are
Hmm.
higher. So, commingled, it might be still around 6%, which is also above 50% above the limit, right? So, what we are seeing is that both Fed and India, though governed slightly differently, are at similar levels in terms of their target. Now, we do expect, given this inflation print, Fed to kind of stimulate the prices, but we have to understand that you know unlike India, US is almost at full employment. There's hardly any labor slack, which means that there's not a lot of unemployment in US right now, and there's
Hmm.
wage pressure also.
Yeah.
So they have a bind, whereas India, for example, they do not have that bind, right? So they can further reduce rates if inflation cools down. I think we had a decent monsoon, which means there should not be any further vegetable price inflation. We are getting agriculture more organized and less
Hmm.
intimidated by unregulated mandis. So we probably would experience lower inflation going forward. So what we will see is that because of this dual mandate of Fed, which is both employment and price stability, and RBI having only one mandate, which is only inflation, it might be that RBI's stance on rate cuts might accelerate
Hmm.
compared to US, which is kind of quite different, where emerging market is able to cut rates, but the developed market is not. So, in that sense, when this happens, that could be the only reason why Indian rupee would weaken further, which is good for exports.
Okay.
However, the balance is still in favor of both working lockstep, which means
Hmm.
that most probably Indian rupee will strengthen from here. We have to remember we'll have the JP Morgan global bond index flows. We'll have a consumer rate MSCI index inclusions. There is private capex coming in the form of FDIs, which is different from the listed markets. And of
Hmm.
course, there is also demand for dollars or hard currency from travelers who are traveling internationally, right? So a few factors could also mean that we might see further strengthening of
Hmm.
rupee, though there are push and pull factors. But on the
Hmm.
balance, it's still rupee to strengthen. So in such a scenario, right, IT companies which are more export oriented, or auto companies which are more export oriented, or you know kind of companies that are more export oriented, they are
Hmm.
likely to be less favorable than domestically pooled revenues like financials, like manufacturing EPCs, like domestically oriented pharma companies and so on. So though IT services recently have done well, these are the headwinds that they need to face.
Hmm.
TCS came out with results today. I think they did a pretty good job in the last quarter. But you have to remember, TCS is one of such examples where they serve e-governance of India on multiple fronts, right? For example, one example I know is they are the backbone for the Indian passport system, right? So which has
Hmm.
domestic revenues. Similarly, any other company, for example, Infosys, which has domestic revenues from the GST, and could be a beneficiary of such, and compared to any other company like purely export oriented company, they could not have the same advantage as these companies.
All right. Okay. So, given this current scenario, do you think that it's a good idea for Indian investors to seek dollar investments as of now? Uh, I'm asking this because India this week allowed resident investors to open USD accounts in Gift City. Uh, what are your thoughts on this?
So I've been to Gift City many times. I've also met the regulator once over there.
Hmm.
It is definitely a very interesting jurisdiction where you have all the regulators like PFRDA, SEBI, IRDIA, and RBI
Hmm.
put together in the same entity. There are already 80 plus brokers who operate over there. There are many new funds which are coming up. One of the challenges was, and can an Indian investor, like we invest in US equity by transferring dollars to a US based broker, they were not allowed, and that barrier has been removed. So
Hmm.
what that means is that as a resident investor, you can just open a dollar account with ICICI, for example, one of the banks that is there, or PNB or HDFC. All the major banks are there, and then park your rupees in dollars, right? There could be multiple use cases for that. For example, if you feel that rupee will weaken further from this point, you can lock in the value of rupee in hard currency, and then let's say you have an obligation for your education or your vacation, you can park dollars there. You can also use that for outbound investments in other international markets. In Gift
Okay.
City, there stocks are quoted in US dollar. There are also US stocks that are quoted there, which is
Hmm.
in the form of special depository receipts, where you actually get fractional shares in US equity through brokers over there. So it's a very interesting jurisdiction. I've been there multiple times. Is they have a very friendly regulator who is willing to look at innovation such as
Hmm.
this, and at the same time they have sufficient staff and infrastructure. Bank of America, for example, has a established office there. There's also a special custom zone where you can only transact in dollars but custom free and so on. So it's definitely a place to see, and most importantly, they allowed sale of liquor in that place.
All right. Okay. So, do what by what you're saying, do you think that after this new venture for investors, do you think that INR might also strengthen in the future? I want to understand how will it impact Indian listed markets? Which sectors will get hit the hardest if this happens, and what other indicators investors can look at?
Yeah, so my sense is that from here, rupee should strengthen because it is at all-time lows. There is expected inflow
Hmm.
that is supposed to come in, and in such a situation, right, when you are converting a rupee to dollar, you're paying more rupee for dollar to
Hmm.
convert it now, versus let's say if rupee were to be at 75, you have to pay less rupee per dollar to convert. So, given that view, this might not be the best time to convert your rupee to dollar.
Hmm.
In such a scenario where rupee strengthens, especially export-oriented revenue companies, right? Look at a company that is exporting two-wheelers, three-wheelers to African countries and Southeast Asian countries. look
Hmm.
at IT services companies that are exclusively servicing European markets, exclusively majorly servicing US markets. These companies will have that challenge where the rupee revenue will decrease, but their cost will keep on increasing. So their obviously margin has to get compressed. So that can be offset obviously by cost cutting, by trying to get more business from domestic markets. So there are levers that the management of that company can pull to kind of stave off this headwind. But that is a matter of evidence as time progresses how they deal with that. But this is something they will have to deal with if rupee were to strengthen. Compared to that, a financials company, right, where their customers are Indian, their revenues are Indian rupees, and their costs are Indian rupee, they're isolated from this FX move, FX risk. For example, EPC company which is building roads or building bridges or ports, uh, most probably they are isolated from this, except for the commodities or the steel they might need to import, or the bitumen they might need to import, or some chemical input they may need to import. But overall, this is where it stands. Similarly, gold and gold related companies, right? If we are experiencing a weakening of US dollar, if due to Fed cut, that also means that gold becomes basically cheaper because it's priced in US dollar. So hence, gold and gold related exposed people who hold inventory of gold might also benefit.
All right. So before we close our session, I also wanted to discuss something related to today's situation in the markets. We are seeing a rally in the markets, and it is mostly because of the IT sector. So just
Hmm.
wanted to get an idea of currently what's happening, because last 2 days the Nifty and Sensex both were a little bit flattish, but since we are in the middle of earnings season now we can
Yeah.
see a little bit of changes in the market. So what are your thoughts on what's happening with the markets right now in general and IT sector?
So, going back to your original question, like these mixed signals that we are getting, right, where
Hmm.
when the rates were cooling down, we thought that, Nasdaq should rally because these are growth stocks, tech stocks. Usually they rally on rate cut expectations. These mixed signals generally precede something which is fundamentally different in the economy. And the bond yield curve in US has been a negative slope for quite a bit of time, which means there is a higher and higher chance of recession. My read is that US GDP is slowing down faster than anticipated. There is not going to be a soft landing but a hard landing. And in such a case, right, maybe the reason IT stocks are doing
Hmm.
well is they obviously in a recessionary scenario, US will move high paying IT jobs to lower cost countries like India. But at the same time, they will be forced to upgrade their technology, make sure there is better automation which will give more work or more demand
Hmm.
generation for export oriented IT services. So it's an interesting situation. But I think overall, um, I think it's better execution, better demand situation, which is probably projected as better earnings for IT stocks right now. But at the same time, the major macroeconomic risk here is the FX rate, which they cannot control.
All right. Okay. So I think we are done with our session for today. Thank you so much, Mr. Abhishek, for taking out time and joining us today on ET Worldview, only on ET Markets live stream.
Thank you very much and glad to be here. Thanks for the opportunity.
Thank you. Thank you, everyone, for joining in.